When I specifically trade a 0 DTE option, there's one thing I very, very rarely do, and that's average down. In general, when you average down, it typically means that you're admitting loss in some way or the other, right? Unless it's a big, it makes a lot of sense and things are turning around, there's signs there, especially if you have time on contracts. But specifically with a 0 DTE, the size that I go in with a 0 DTE, 99% of the time is the size I'm willing to lose. I don't ever want to go into a 0 DTE trade and get stopped and get back in and get stopped and get back in and get stopped and get back in, because at that point it's going to wear down my mental, unless I stop in profit or I've already gathered profit and put a stop loss at entry. And if it sweeps lower, let it go in and then, go back in at a later point in time. But in general, if I am trading 0 day contracts, I want to define my risk and let that be it, right? I don't like to size for zero a lot of the time. I like to trade until the chart tells me I'm wrong, which means I size responsibly. But in general, I don't want to just recklessly trade specifically a 0 day contract. I want to be okay with the size I'm going in. It's typically lighter than other contracts. And conversely, if I get contracts with more time, then I feel more comfortable with a bigger dollar exposure. So it may not necessarily be in quantity of contracts, but a bigger dollar exposure on longer term trades, because the risk is lower theoretically, and I can make more money. The percentage may be lower, but the dollar gain theoretically will be higher. The inverse is true with SPY, where if you're trading a 0 day SPY option, for example, where the percentage gain is higher, so consequently, my dollar exposure can be lower because I'm looking to make the same net dollar gain, essentially, right? So I don't risk as much because the amount that I could make in terms of a percentage gain is vastly higher on a short-term contract, but the risk is also vastly higher. So theoretically, if I'm looking at dollar gain, like let's just say you want to make $100 per contract or $100 for a trade, right? That might be, so on $1,000, let's just use simple numbers, that's 10%, right? So maybe on a swing, you put $1,000 in, and when you make a 10% gain, you got your $100. But on a 0 day contract, you still want to make that same $100. Maybe you only risk $100, but you're looking for a 100% gain. So you still make that 100%, right? Sorry, you still make that $100, but the percentage gain is different because the risk is different. So whenever you're trading shorter term contracts or weekly contracts, consider sizing down and keep in mind the dollar, right? Don't worry about percentages, focus on the dollar. What are you looking to make on each trade? What are you willing to lose theoretically? Because the less time that you have on the option, the higher your risk is. Consequently, the higher your reward is. So if you're consistent in that sense, where you are lowering your dollar exposure short term and increasing your dollar exposure long term, you remain somewhat constant. You remain in a constant ebb and flow of balancing the two with risk to reward. And I think that's something that a lot of people don't really grasp. They might say $100 is $100 is $100, which it is. But in the realm of trading, what you don't account for is the risk, is how likely these will burn out. How likely will I lose money on these versus how likely I'll lose money on the ones that are 30, 60, 90 days out, right? And again, what matters is that dollar gain. So I would heavily suggest you focus in general, if you do trade shorter term options, weeklies, 0 days, whatever, that you focus on the dollar gain. I challenge you to do this. It's a little mental trick, right? Focus on the dollar gain, not the percent gain. Whereas you focus on the dollar gain as well with your swing contracts, your longer term contracts, your longer term trades. Because at the end of the day, your portfolio doesn't care how many percent you make. It doesn't care that you banged out a 500% banger. Doesn't care. What it cares about is the amount of dollars you make. And also, you can take, once you get to the point with size and comfortability, when you have those swing trades, you could go to runners and maybe they end up being a 20,000% gain or something incredible, right? But as that risk grows and as you can realize those profits, you take less and less and less risks because you take profit. So these are the things that a lot of people don't really sit with and think about. And I guarantee you, if you understand this concept and you focus on the dollar gain, not the percent gain, that you will feel a lot less stressful in your trading, especially if you're trading 0 day or weekly contracts in comparison to your longer term contracts or your equity or your leap calls, whatever it is.